Welcome to Financial Inclusion Unlocked, the podcast featuring conversations with innovators, practitioners and thought leaders who are working to unlock the potential of financial inclusion. Financial Inclusion is produced by SIJ Media. Thanks to our sponsors for Series 2, CGAP, the Innovation Lab for Inclusive Finance, that works to advance the lives of people living in poverty, especially women, through financial inclusion. I'm your host, Jag Farron. Inclusive insurance is emerging as one of the most effective tools for strengthening household and community resilience, especially in contexts where climate shocks, health emergencies, and income volatility are becoming more frequent. When designed well, insurance reduces the financial stress of unexpected events, protects livelihoods, and shortens recovery time. In this episode, I meet Solène Podevin Favre, the Global Director for Inclusive Insurance at VisionFund, to learn about her experience and the work of VisionFund in designing and scaling inclusive insurance solutions across Africa, Asia, and Latin America. Solène highlights what VFI has learned about co-creating trusted products with insurers and communities, and the importance of partnership to build resilience of clients of VisionFund, microfinance institutions, and NGOs. Season 2, Episode 4 of Financial Inclusion Unlocked. Solène, thank you for joining me on the Financial Inclusion Unlocked episode. I'm really happy to have you here.
Thank you for inviting me, Jack. Glad to be here.
So we're going to be talking about microinsurance.
Sure.
I want to know, before you got to VisionFund, what's your story?
So my story was really around protection and dignity. So how can I bring protection for more resilience to the people that I serve, and dignity as a right for people to live. So I joined VisionFund, but before coming to this VisionFund journey, I work in the Indian slum. So I was providing insurance for slum dwellers in Maharashtra, so in Pune and Mumbai, and then I joined another organization called Microcredit in Cambodia to try to help the Ministry of Labor to design the social security for the country. And then I joined the French insurance group called Prévoir to set up and lead the Cambodian subsidiary of this French insurance group. It was the first ever microinsurance company in Cambodia at that time. It was in 2011, 2012. And then I led that Cambodian subsidiary for 7 years.
Wow. A lot of people, I used to work in the insurance industry in the UK, and a lot of people say they didn't choose to work in insurance, they kind of fell into it. So what was your journey and first experience with, hearing about insurance and taking your first job in the sector?
So I think it was really how I can bring this protection to people. So it was never a dream to work on insurance. I was trained as a public health specialist, but when I realized the power of insurance being a resilience tool and being part of a holistic approach in financial inclusion, it really rang a bell to me. And so I started my career in France for 10 years, working on insurance for students, so insurance for a particular population, students, without a high budget. So it was really how we can adapt this tool in order for them to really get dignity, get resilience through this financial tool. So it was always what drives me on insurance. It was really to see how we can adjust the insurance mechanism with the solidarity to bring more resilience to those who need it the most. So that was really what drives me.
What were the products that you're working on in India in particular?
So in India, it was a health and life. 15 years later, health and life are still the priority for people. So we are conducting with VisionFund a lot of field survey with our borrowers, with the beneficiaries of World Vision, and always, health is the first priority. Even if there is a national scheme in place, even if medical costs are free of charge in countries like Malawi, for example, but still the most impacting risk for a family is around health and around the hospitalization, because of course, even if there is a national scheme in place covering medical costs only represent 50 to 60% of an hospitalization cost. So all the other out-of-pocket expenses that prevent people to go to the hospital because they don't have the money to pay for transportation, medicine and all. So I started internationally in India with health. Then Cambodia was again a lot focused on health. Today, with VisionFund, since 7 years, we are working a lot on health. Not only, of course, climate risk are also very major for the communities that we serve, but still, health is really the priority.
And we'll get into some of those products a little bit later.
Sure.
But now to come to VisionFund, because I think for those that are listening, I assume many would know what a VisionFund is, but maybe not the insurance component of VisionFund.
Sure.
So tell me a little bit more about that.
Yeah, so VisionFund is a network of MFI. We are present in 25 countries. VisionFund is the microfinance entity of World Vision. So World Vision is this international NGO. World Vision is present in 100 countries, providing support to the communities, whether it's on water sanitation, education, and financial development, economic development for the family. So we are in 25 countries. We serve around 1 million borrowers globally. And since we started, microcredit was really the core product, of course, for an MFI. But since we started, naturally, we started by covering our loan. In case of death of the borrower. But then we quickly realized that it's not only the borrower who needs some support, and it's not only on death risk that he needs support. So we more and more we evolve our product. So we cover the whole family and we cover some other risks. So of course, Credit Life is still the first product that we distribute with our MFI. But health, we just talk about health, whether it's hospicash or medical costs, but also some other products like covering people, so personal accidents, education life, term life, funeral, and also some other products covering the business of our clients. Of course, we have crop, livestock, business interruption, motorbike, and also the ClimaCash that we have just launched earlier this year. In March 2025 with the InsurTech Ibiza. So ClimaCash is a bit the same as Hospicash, but adapted to climate. So really it was a VisionFund objective was really to see how we can cover the life shocks of our borrowers. And since a couple of years now, I think since 3-4 years, we started looking at other beneficiaries, not only VisionFund clients. So because we are the microfinance arm of World Vision, we started working closely with them, seeing how we can distribute insurance for their beneficiaries. So those who don't necessarily have a loan, and like for the savings group of World Vision and for the sponsored children of World Vision. So we started working in countries where we don't have any MFI, for example, providing mostly health, but not only health, health and life, sometimes climate. So World Vision beneficiaries. And now, since a year, we are also providing technical assistance to other MFI outside of VisionFund network. Okay. So we started in El Salvador with Copihel, in Lebanon with Al Majmoua, and now we are just starting last week with Vitas in Lebanon, and we are working more and more with other organizations outside of VisionFund and World Vision umbrella.
That network,
yeah, and just to provide technical assistance to make sure that this kind of product can benefit more people again.
Wow, so you're very busy.
Well, yes, we are busy. Yes, for sure. I'm lucky to have a team. We are a team of 8 on insurance. So working for VisionFund MFI, but also for World Vision entities and for some other
outside
partners.
Of the network.
Yes.
And that's my question, because even within the VisionFund ecosystem, you mentioned 25 countries.
Yeah.
So some of these products, health, life, and then into climate risks, those risks are slightly different in each market, right? So how do you work with each individual VisionFund entity?
Yeah.
Who may have different ways of working, different priorities. I'd love to hear how you do that on a global scale.
Sure. So, of course, it's really country-wise. We never start any product or we never start working on any product without a deep need assessment, field survey, focus group discussion with the population that we already serve. So we already know them most of the time, whether it's World Vision or VisionFund or other partners. So based on the need assessment, we try to see what are the priorities in terms of risk to cover, what is also the willingness to pay, the capacity to pay, and then we start designing a product, and then we go to the local market. So this is something, thank you, Jack, to give me this opportunity. VisionFund is not an insurance company, and we don't underwrite the risk. We are not the risk taker. So we always partner with a local insurance company for them to cover the risk and for us to co-design the product. that we bring to the market. So we will work with local insurance companies based on the needs that we have identified and based on the capacity to pay. And then we try to always select the best insurance company for the specific risk, for the specific population in the specific area where we work. And of course, the best insurance company is not always the cheapest. It's really the one that provides the best terms and conditions. There is no point to partner with an insurance company with 50 exclusions, for example, so it's really the most simple one, simple to understand, simple to apply, simple to claim. This is really key for us.
And it's in some of the markets that you work where insurance penetration may be quite low. Is there also a capacity building need at the insurer level of why this market should actually be tapped into?
Yeah. And this reminds me when we started providing credit life. So a very basic product, credit life, in DRC, for example. So I think this is what really brings our team, in addition of what we could see or what we were doing even before the insurance team was formed. So we... From the insurance team of VisionFund is, so I told you we are 8 with insurance background. So we have all worked for insurance companies. So while negotiating with the insurance company, it's very easy to see if they try. It's not try
you know
to
the
cheat,
language,
but
we know
the language.
lingo,
we know also the calculation behind. So we are not asking very stupid, silly things. We are conscious, but also coming back to DRC, when we see a credit life premium, for example, at 2%, just to cover the loan in case of death, the remaining loan balance, it doesn't make sense. So this we cannot accept. And this is really what brings this insurance team, the global insurance team, because first we are experts. Second, we are working in more than 30 countries now. So we can leverage on the knowledge that we have, the capacity also that we have. This brings me another example in Rwanda. So in Rwanda, we started a new program 2 years ago covering the member of a savings group of World Vision getting a loan at VisionFund. So providing a loan to a savings group is far different from providing an insurance to a saving group. It's far different from providing an insurance to just a community group. This is because the savings group, we only have the KYC of 3 people in the group.
That's the leader, the treasurer and the chairperson?
Yeah, exactly. So 3 among 25. So we had to negotiate with the insurance company to still cover all members of the group, plus all family members of everyone, not getting any information.
So that's 3 KYC for maybe 80, 90?
Exactly. Yeah. And we did not want to waste time to get all the identification. We really wanted to keep all the time on education. And then we negotiated that with the insurance company with whom we work in Rwanda. And this worked. And so we spend a little bit more time on identification when there is a claim. And at the enrollment part, we have all the picture, all the ID card on the table, and we take the picture. And this is what we send to the insurance company. And that's it. So when there is a claim, we have the reference of the group on the picture, so they can check on the picture, and then they can create the KYC. So really, that was really innovative. And of course, when we go to Tanzania or to Zambia, and we try to implement the same system, and the insurance company say, we cannot do that. How come you cannot do that? We have found in Rwanda one insurance company doing that. So you can. It's a matter of willingness. So I think this is really what brings this global insurance team. In addition, it's really the view of the global expertise that we have. And then coming back to your question, yes, each product is locally designed with the local insurance company, depending on the national scheme. For example, I was talking about the national scheme. Of course, we are not duplicating anything. We are not asking our clients to pay for something that they can get from the government. No, we are here to complete. So complement. So in order to complement, we need to know very well what are the gaps that they would like to get covered, and they are ready to pay for it.
So that's mainly for the Vision Fund, who have the saving groups. But then if we expand that to World Vision, where it's maybe those that can't access credit, for example, what other types of solutions when it comes to insurance? Is it a different angle that you're looking at?
Yeah, so this is something that we are working on since, we can say, 3 years with World Vision. So the difficulty working with the humanitarian sector is that people, they may not afford to get a loan, so we cannot bundle the product with the loan. Yep. So when we cannot, we have to find some other solution. One solution is on climate, for example, with a meso insurance scheme in a country. So this is what we try to implement. So it's just coming soon, or we are working on it since a year now, but it will come soon in the Amazon basin for 4 countries, Brazil, Bolivia, Peru, and Colombia, and in Cambodia for the Mekong area. So we try to have a meso system, a meso insurance scheme on climate for flood and drought. And then it's the entity who will receive the payouts. It's also the entity, so World Vision Cambodia, World Vision Peru, and all, who will pay for the premium. And it's just in case of massive disaster. But then I have another example with World Vision Bangladesh. So here, this is for another population of World Vision. World Vision is the first child sponsorship organization. So we have 2.5 million children being sponsored by World Vision and World Vision sponsors. And we tried to implement insurance. The dream is that any child being sponsored by World Vision will be protected on health through an insurance product that will cover also the family. So we are piloting that in Bangladesh. So how do we do? We could get some premium subsidy. The idea of the premium subsidy is really for them to come on board of insurance, understanding through all the education that we can provide, understanding the mechanism of insurance. How can they use the insurance? Yeah. How powerful it is, and to get used to this product and to get tangible value-added services to really see the tangibility of this product. And while having this premium subsidy, we are going, and this will start in a month, we are going to start a nano savings model. So the nano savings model means that while the premium is still subsidized, because we secure 3 years of premium subsidy.
Who normally subsidizes premiums? In the insurance, like in this, who would be, what kind of donors? Is it multilaterals, bilateral agencies?
Yeah, it's a mix of different donors. Okay. In the specific case of World Vision Bangladesh, it's all the donors, the sponsors of World Vision Australia who sponsor a child in Bangladesh. But here, the premium is around $12 to $15 per year for a family of 5 or 6. And with it's a very great product with OPD, so medical consultation, hospitalization, but also telemedicine, health checkup, delivery, so all that for 12 $13
a year for 6 people.
Yeah.
How is that possible?
Yeah, we found a great insurance provider, Milvik, in Bangladesh. So this is not a product that we can have in all countries. By chance, we can have that in several countries, and it's great. Yeah. But the idea is that we subsidize the premium for 3 years. The first year, we implement. And we try to set up a nano savings model. So, and the second year, we ask people to save 1/12 of the premium each month. So they will save while they are subsidized. So the next year, they will be able to pay for their premium. Because for very, very low-income people, the major issue is really to pay upfront the premium. Even $12 to $13 per year, it's too expensive for them to pay upfront. So, and we cannot negotiate with the insurance company to pay monthly. In terms of operation, it's too expensive. So we have this nano savings. They will save 1/12 of the premium. Then the next year, they will be ready to pay for their premium. We just kept 1 year buffer just in case we have a bit delay in terms of savings. But this is the idea. Then we can transfer the premium payment to the families. And we think it will work. We are not sure yet, but we think it will work because in September when we were on visit there, we could see that they have started to save to pay for the premium, even if the program of the nano savings is not implemented yet.
And that saving culture comes in. And is that to try and kind of have an exit strategy from the premium subsidies?
Yeah, because we don't believe on premium subsidy forever. We try not to have premium subsidy. We believe people, they should pay the right premium for the right product. But for the very low-income people, for very specific population, it's the same for refugee. For very low-income population, you need to help a bit to have them coming on board, getting the education on insurance, trying to understand what it means, how they can claim and all, see the value of the product, and then being ready to
transition.
Yes.
Yeah. So this is really fascinating. And just to touch back on climate risk, you mentioned the 4 countries in the Amazon basin and in Cambodia. And you touched briefly that, so it's flood and drought and at a meso level, which means it's not directly at the community, but this is for VisionFund country offices.
Yeah,
so,
World Vision.
World Vision, sorry. Yeah. So without insurance, what do World Vision usually do when there's a big flood or a severe drought as a country office?
Sure. So usually what they do, they have to keep aside a small percentage of their budget in each country in case of emergencies, to cope with emergencies and to be able to immediately serve in case of any emergency. Emergency are not only climate, it can be war, risk and all. Yeah. But these small amounts kept aside, we know that it will not be enough in the future. Climate risks are higher, more frequent, more severe. So we know that this will not work on the long run. The second mechanism that World Vision use is when there is a massive disaster, for example, then we get donation from people. But donation will not come day one, immediately in hand of our colleagues to respond. So that's why we have this small budget kept aside, then the donation. But we believe that we need to prepare through an insurance mechanism to really be able to immediately send the money and then get that cash for the family. So when there is a claim payout, what the World Vision entity will do is they will give back to the community. So we are writing the model, and we think part of the claim payout can be given as cash voucher or food or water. And part of the claim payout can be used for rebuilding a school, rebuilding a community, community infrastructure. So we don't know yet what will be the share. Is it 50-50 or depending on the area, depending on the damage that they will see? Yeah. So this is still under writing the process for the model. But this is the idea of really bringing what we had at VisionFund, this climate disaster insurance scheme that covered all the loans of VisionFund. How can we adjust that to the humanitarian?
They're then leveraging multiples rather than having their pot of savings in case of a disaster, paying an insurance premium, then can have a bigger payout when necessary.
But it's an education also with our colleagues from World Vision, because
for sure.
It's not obvious for them. Yeah.
The question maybe people listening would say, but you talk about donations, they take a long time. Yeah. But insurance sometimes takes a long time as well. So how have you built a product that can rapidly respond?
So in the case of disaster, usually, because we work already on disaster on the meso level for VisionFund, it takes 2 to 3 weeks to get the claim payout. This is something that I believe we can improve with our partner. But we have seen on some other risk, or with some other partners, a very quick and very responsive answer from the insurance partner with whom we work. I can give you 2 examples. One is on Hospicash. For example, in Uganda, we work with an insurance company called Turako, and our clients, they will send the picture with their phone through WhatsApp of the claim discharge, on the hospitalization discharge. And then they can get the claim reimbursement within 6 hours. And we know how claim reimbursement are important in terms of satisfaction. Turnaround time is key. So getting the reimbursement on their mobile wallet within 6 hours from the hospitalization discharge is something that is really good. And then we have another partner with whom I told you about the ClimaCash product that we have. We have implemented that with Ibiza and APA, the insurance company in Kenya, in March for the short rain season. And here, people, they don't have even to claim. The claim is automatic. So Ibiza can look at the data, and when it triggers, automatically, people, they get the claim reimbursement on their mobile wallet. There is no claim process. They don't have to fill anything. Everything is automatic. They don't have to even ask for it. It comes automatically.
And this is measured, and how are they measuring the rainfall or?
Yeah, this is on satellite.
On satellites,
yes. Yeah. So this is working with Ibiza. So they do all this part. For us, it's more the education and the distribution.
Wow, so interesting. So we've covered a lot of examples. I'm always really interested in personal stories about how financial inclusion is really impacting and actually improving lives rather than just access to financial services. So is there any stories that you had from maybe travels or certain projects of when you've seen this in practice?
Yeah, I think we have a lot of stories that we could share. I'm just thinking about one. It's the story of VisionFund. I told you before the Rwanda and the savings group and this model that we have implemented. So VisionFund is one of our clients, member of a savings group of World Vision, getting a loan at VisionFund. Actually, it was his wife who was the member. So his wife took a loan, got the insurance embedded with the loan, life and health. She passed away. He got the funeral benefits to write off the loan, but also to pay for all the workers at his farm while he was on the mourning period. He could also pay the school fees for his children with this benefit. And then he got some leg issue. He got hospitalized, that was covered, and he got amputated, and he received a disability benefit. And with this disability benefit, again, he could pay for the school fees of his children. So, because this is a coping mechanism that we see a lot with very low-income people. Yeah. The coping mechanism is to stop sending children to school and to stop having meal on the table, or at least 2 meals per day. They try to avoid that. So here he could continue sending the children to school. And then what was really transformative in his journey is that this disability benefit could help him to transform his business. He was a vegetable producer. With one leg, he could not sustain anymore. So he changed his business model of his farm, and he could buy a pig. And then now he became a pig breeder. So he has several pigs now. And it was really how insurance could continue in his life to cover all the life shocks and transform his life to sustain and to grow. So it's really, along with loan, savings, insurance, education, and how we could transform his life, how he could thrive, thanks to the support that we bring.
Well, thanks for sharing that story, and it really shows the impact that it can have. To ask about scaling initiatives, you mentioned that there's over 2 million insured now through VisionFund and World Vision as a network. What are the challenges? Insurance is hard, right? It's not easy. So what are some of the kind of the big challenges that you tackle with day to day and as you are scaling?
So today we are serving 2.1 million people around the world. For us, the scope that we can have, I mean, the potential that we have is huge. With World Vision, with some other partners, the big challenge is education. How we can educate people on insurance and how they can trust. But I think going through our partners, through our local MFI, through our local entity of World Vision, through the local partners, it's really building on the trust and confidence that people have with this local organization, because they are used to work together, they are used to provide support to the families, to the communities. So it's really seen as the continuity in the services that we provide to them, adding this insurance. So education is one. Of course, funding is another one, especially in 2025. And especially to kickstart the programs. We can see in countries where the regulation is very constrained. We can think about West Africa and the countries of CIMA code, for example, where it's very difficult to implement insurance. We cannot embed the insurance product with a loan, for example, or the commission rate is very low. We have to know that for all our partners, whether it's local MFI, World Vision entity, or other partners, the operational costs are quite high, especially to kickstart. Yeah. And then after 2 years, it's okay. But to kickstart, it's an investment. And in terms of priorities, it's not always seen as a priority. So this is the biggest challenge that we have to fight.
I can imagine. So how do you approach that? So there's a range of funders that you work with, or how much time are your team spending on actually looking for those finances to kickstart pilots and new projects?
So we try to balance between operations and also fundraising, but we believe. We really believe on the example. So we have some flagship countries who implemented the insurance, many products to really have a product that really fit with the needs of each population that we serve and all. And when we got all the results of this strategy, and we can bring this strategy to others. And then we have kind donors who support us, and without them, nothing would be possible. And we always thank them, of course, to believe that it's ready to kickstart, and then we have the exit strategy, and it can continue on their own.
Yeah, brilliant. Well, Solène, it's been great to have you on the show and learn about your journey in insurance and VisionFund. If I could ask you 2 questions to finish off.
Yes.
And this is 2 messages or your call to action. First of all, to an insurance company, and secondly, to a microfinance institution that is not working with this segment of the population. What would you say to them in terms of encouraging them or giving them a piece of advice of something that you've learned as they start their journey?
Yeah, I think maybe with an insurance company, I think maybe the piece of advice would be a bit the same, because it's a partnership. So it's a collaboration between the two. I think what is key is to start simple with a simple product, a very simple product like funeral, for example, and then to build on around this product to add some more risk being covered. I think it's really taking the time to listen what the beneficiaries are saying. Like, for example, starting simple and then grow fast, but in between, check your product, check the satisfaction, adjust the product. Don't be afraid to change everything. It's not because you work 1 year on a product, you implement, you go on satisfaction survey 3 months after the implementation, and you have to change again everything. No, don't be afraid of that. It's okay. And then continue, and then get the feedback always from the team who implement, because they get a lot of feedback from the field, get the feedback from the clients, and then adjust always the product. But start simple and grow fast. There is no point to have pilot for 3 years, for example. A pilot of 6 months to check the process, to check the satisfaction on the product, and then you can grow.
And that's a wrap. If you enjoyed this episode, please make sure to subscribe or follow Financial Inclusion Unlocked wherever you're listening, whether that's Apple Podcasts, Spotify, or any other podcast app. That way, you won't miss any of our remaining episodes we have coming your way in this season. You can also connect with us on LinkedIn. Just search for Financial Inclusion Unlocked to join the conversation. This podcast is produced by SIJ Media, and Series 2 is proudly sponsored by CGAP. For more information on their work, check out the website at cgap.org. That's cgap.org. I'm Jack Farron, and I'll see you next week.